The S&P 500 is approaching the 200 daily moving average after we have the first day of a positive slope on it. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today we were down 0.36% as we continue that rejection from the resistance at 400, and we did break down below yesterday's low. So it does look like we could be getting that scenario where we are coming down to touch the 200 daily moving average before getting that bounce, or we'll slice down right through it and get the bear scenario. Either way, we're going to let the price action guide us. Now, right now, price action is telling us there's a very good chance we go lower after that rejection because we did close at the low of the day and we did break down below yesterday's low, and those Bollinger Bands are starting to expand. So there's a very good chance we need to go a little bit lower, and now that 200 daily moving average is officially positively sloping. So if we do get a positive bounce off of that level as support, I do think there's a very good chance we are going to break through 400 and go fill that gap at 408. Now, obviously, there's another scenario where we slice right through it like it's not even there, and that would instantly be bearish because below the 200 daily moving average, we are likely going back down towards 380. So it's a very simple trade plan. No matter which direction we go from here, it is all revolving around the risk level at 393, which is the 200 daily moving average. So right now, price action is telling us we could be going lower before we go any higher, so just be prepared for that and manage your risk around that level. Another option, if you want to get bullish, you can simply wait until we start closing back over 400, whatever fits your risk management and whatever fits your trade plan. On the NASDAQ 100 triple Qs, we were down 0.13% today, and just like SPY, it does look like another rejection down here below a negatively sloping 5 EMA, which means there is a very good chance we come all the way back down towards the 200 daily moving average around 290, and then below that we could fill the gap at 288. Now do keep in mind the triple Qs did get a positive bounce off the 200 daily moving average already, so there is no guarantee we need to go hit it again. But if we do hit it again and we get another positive bounce and break back over 294, that could look like a successful double bottom breakout, which could easily take us back up to 303. So these are very simple trade plans revolving around these critical levels, and on the triple Qs, that's going to now be resistance at 294 and critical support at 290. We break below 290, you know we're going to the gap fill at 288 and then likely the gap fill at 273, and that will be another confirmed downtrend of another lower low, so you need to be risk off if we break down through 290. You can buy around these risk levels knowing there's a chance you break down through them, but you will have a smaller loss, so manage your risk right there at that critical support. On the Dow Jones, we were down 0.76% today, and the Dow Jones did get a close below the support at 327, which means there's a very good chance in the Dow Jones we are also going down to the 200 daily moving average, which is just below 324. You'll notice the Dow already has a positively sloping 200 daily moving average, so that will be considered a critical support level, which means if we break down below it, that is bearish, and it means we could come down to close the gap at 311. So all of the indices look like they want to go tap the 200 daily moving average, so do not be surprised if we go a little bit lower before we get any sort of buyers at these levels. The Dow Jones will now have resistance right around 327 and 333. On the Russell 2000 IWM ETF, we were up 0.01% today, so we went absolutely nowhere, and we closed right on top of this critical support at 188. Below 188, we're breaking down, and we could come back down towards 186 to 185, and then below that, we have the gap fill just below 181, and we also do have a positively sloping 200 daily moving average at 181 as well. So with all of the indices getting positive 200 daily moving averages, if we do get a positive bounce from these support zones, that will be a bullish indication we could be going to higher prices. In IWM, we need a bull breakout above about 191 to 192, and then we should be off to the races to higher prices. So if you want to wait to get bullish until we get that confirmed breakout, there is nothing wrong with just waiting and getting that confirmation. On the ARKK ETF, we were up 2.06% today, with the second day in a row bouncing off of the positive 50 EMA, which is that support zone right around 38.4. We are back above 39, so you can now use this risk zone between 38 and 39, but you have to remember this is still a lower high, lower low, which means we could still be trending lower until we get the breakout above resistance at 41. Above 41, it looks like a bull breakout, but we need to wait for the confirmation, and the next bear breakdown will be a close below 38.3, which could send us back down towards 37 to 35. On the VIX, we were down 1.19% today as the VIX is still continuing to get crushed, but the VIX did reach down near the support at 20 and did get a bounce from that zone. Remember, if the VIX crushes down below 20, it very likely means we're going back into a bull trend, but we cannot assume it's going to happen. We need to wait for confirmation. Continue to be cautious if the VIX bounces from here and starts to break back above about 21.5 because that could mean we're continuing into the downtrend. On Bitcoin, we're currently down about 1.07%, and Bitcoin is still at very critical support at the support trend line and the 20 daily moving average, which is right around 23,000. If we break below this support, we have support down here at 22,400 and then 21,300. And below that, we should revisit the 200 daily moving average at 20,000. The next bull breakout is 25,000, which means we should be heading to 30,000. On Amazon stock, we were up 0.5% today, and Amazon is trying to hold this support zone right around 33.8, but if it does break down, we will be looking for the gap fill at 90. The next bull breakout is going to require a break back over 98 and then 102, and then we will be looking for a bull trend that could take us to 109 and 115. On Microsoft stock, we were down 0.3% today, and Microsoft continues to get rejected from this critical resistance zone right around 252, which is increasing the probability it's trying to go down to 242. The lower Bollinger Band is starting to squeeze, so we could still find support in this zone right around 249, but I would suggest waiting until we break back over 252 before getting bullish, and then we will be looking for the gap fill at 262. On Nvidia stock, we were down 1.21% today, and we're still getting rejected from that critical resistance at 238, which you can continue to short from, but you instantly need to get out if we break above that because we should short squeeze to 244 on a bullish breakout. From here, we have critical support between 227 and 230, and if we lose all of that critical support, we're likely coming down towards 219 and 213, and then the gap fill at 211. On Nvidia stock, we were down 0.92% today as Nvidia tried to get the bull breakout above 208, but instantly found sellers above that resistance and came right back down towards this support right around 204. The critical support is still all the way down here at 196, so you can stay bullish above 196, but if we break down below 196, we will be looking for a retest of the next critical support lower at 183. The next bull breakout will be a break above 214, which should send us higher towards our price target at 230. On Apple stock, we were down 0.34%, and Apple continues to find support around this 200 daily moving average at 147, and we did fully close the gap at 146, so this is going to be a very strong support zone. You could buy Apple between 146 and 147, but it's not looking bullish until we break back over 150, and then we could run back up to 156. On the financials, we were up 0.2% today, and the financials are trying to hold this support zone at the rising 50 EMA at 35.6, so it's going to be bearish if we break down below that support because we do have a bearish trend building up. The industrials were down 0.23% today and maybe trending down to try and fill this gap at 100, which is also the critical support zone. The healthcare sector was down 0.74% today, continuing to sell off and getting a little oversold below the lower Bollinger Band, but this is definitely looking like a strong bear trend while we're below 130. The energy sector was down 1.44% today with a bearish engulfing candle as it's coming back down towards support at 82.6, and we do have the confirmed bear trend, so if we break support, we'll be looking for the next leg lower at 80.5. So jumping back over to the S&P 500, without a doubt, these are bearish closes on the daily chart, which means we could still be trending lower, with the most obvious target being that rising 200 daily moving average at 393. That is your critical risk level for longs or shorts, and you want to short if we break below it, and you want to go long if we bounce off of it. It's a very simple trade plan with very little risk. You just need to let the price action tell you which side of the trade. So as always, no both scenarios and let the price action do all the talking, and no matter which direction you're trading, always remember to manage your risk because this is a volatile market, which means we can go up or down with very large moves from here. If you want to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. I also have a trade alert service called Bank Trade Alerts that sends you all of your buy and sell alerts directly via email and text message and only trades the ETFs TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.